Welcome to this explainer. Today, we're going to do something incredibly powerful. We are going to unpack your raw trading data to diagnose your true mathematical edge. And honestly, more importantly, we're going to uncover the hidden risks that are currently holding you back from absolute consistency. If you've ever felt like your trading results are just brilliant one month and totally frustrating the next, well, this deep dive is exactly what you need. Let's start right off the bat with the headline symptom of your success, an incredible 89.5% win rate across your identifiable closed trades. I mean, for most traders, seeing a number like this, that's the holy grail. It shows massive potential and really strong execution. But a win rate in a vacuum doesn't tell the whole story, does it? We need to know exactly how that number was built, what market conditions actually allowed it to happen, and, well, how fragile it might be if the winds suddenly shift. So here is the roadmap for our audit today. We'll start with the raw data checkup, then identifying your trading edge, the July performance deterioration, hidden risks and warnings, and finally, your practical development plan. Let's get into it. Section 1, the raw data checkup. 21 reported trades, 1 massive edge. Okay, so when I first looked at your file, it had a bit of a mixed layout rather than just a clean single-table CSV. So I went ahead and normalized your trade record so we could accurately calculate your baseline performance metrics. Now, your report initially showed 21 trades. However, when we broke down the strategy, we identified exactly 19 closed trades. And those 19 closed trades, they consist of 17 wins and just 2 losses. This right here is the absolute mathematical foundation of that 89.5% win rate. Those other 2 trades appear to be either open, uncategorized, or maybe just missing from the detailed sections. The massive difference between your average winning trade and your average losing trade, paired up with this huge win rate, is literally the core of your positive expectancy right now. Section 2, identifying your trading edge, where your profit is concentrated. What is incredibly revealing here is how vividly we can isolate your true superpower. A staggering 91.4% of your overall profit and loss comes strictly from uptrends. In fact, you took 14 trades during clear uptrends and you won a flawless 14 out of 14. That is just an incredible display of skill. It proves that your absolute best ability is recognizing and then exploiting directional momentum. When the market structure, the trend, and your trade direction are perfectly aligned, man, you are virtually unstoppable. Zooming in on specific setups within those trends, your inside news strategy is the one doing all the heavy lifting. This single strategy generated 54.7% of your overall P&L across 7 distinct trades. It is, without a doubt, your strongest individual playbook. But here's why that matters so much. The inside news strategy wasn't just highly accurate, it produced the highest average risk to reward, or R to R, among your larger samples. And this combination of a high hit rate with a high R to R, that's a massive green light. It points to fantastic, quality trade selection. You aren't just, getting lucky and snatching tiny profits to keep your win rate artificially high. You are catching meaningful moves and really maximizing your reward relative to your risk. Now, we also need to highlight another setup you've been using, Signal 1 with VCP. This setup won 100% of the time in your log. But, and this is a big but, because it only consists of 3 trades, we really have to be extremely objective here. It's a highly promising setup, absolutely, but we have to treat it as a concept that needs more testing rather than a fully validated edge. You're selective enough to maintain a strong overall expectancy, which is awesome, but we just can't overtrust small samples quite yet. Section 3, the July performance deterioration, when the market shifts. Contrasting your performance month over month is super revealing. In a flawless June, you had 9 trades, a 100% win rate, a massive 2.38 average RR, and a net P&L of over $15,700. But compare that to July. Now, yes, July was still profitable, which, hey, is a win in itself. But the quality of that performance weakened considerably. Your net P&L fell to roughly $4,700, accompanied by a lower average P&L and a much, much weaker RR. Section 4, hidden risks and warnings, concentration risk and small samples. So the core issue behind that July slump is kind of a double-edged sword. Your massive success in uptrends is actually a concentration risk. The data explicitly shows that your system is currently heavily optimized for bullish continuation. Because 91.4% of your profits come from uptrends, your performance just drops sharply outside of them. If the market spends a few weeks in a distribution phase, a decline, or even just choppy sideways action, your current results are going to weaken very quickly. You really have to recognize this as a condition-specific strategy. Next up, we need to look at a specific weak point in your playbook involving a setup you labeled Signal 1 with 20% away from FVG. This specific fair value gap variation actually produced a loss in your log. Now, as the analysis states, one trade is not enough to reject the idea, but it is a warning sign. What stands out here isn't just the fact that it was a loss, but the concerningly long holding period associated with it. This suggests that your entry might be happening way too far away from the optimal area, and when you enter too far from the optimal zone, it causes delayed follow-through or just really poor risk efficiency. I wouldn't say scrap the setup entirely, but this is a glaring warning sign that you definitely need to monitor. Section 5. Your Practical Development Plan. The prescription for the next 20 trades. Okay, for your next 20 trades, you must execute these 4 specific steps to elevate your trading. Step 1. Implement a fixed journal format to standardize your data collection. Step 2. You absolutely must define a market regime filter. You need a crystal clear objective rule that tells you, hey, is the market trending up, going sideways, or declining? Step 3. Adjust your risk based on that regime. Use your strongest setups and environments, like those uptrends, as your baseline risk, and then scale down when conditions are suboptimal. And finally, step 4. Track that FVG setup completely separately for the next 10 to 20 trades before you even think about making it a core part of your playbook. Let's look a little closer at step 1. Your fixed journal must rigorously capture these specific data points for every single trade. You need to log the entry quality, the exact market phase at the time of entry, your holding time, initial stop distance, target distance, and your high-quality rule adherence. The goal here is to review every future trade you make and compare it directly against the data profile of your flawless June winners. And here is the golden rule moving forward. Your main target is absolutely not to focus on improving your win rate. Actually, scratch that. At nearly 90%, your win rate is already stellar. Trying to push it any higher is just going to lead to over-optimization and frustration. Instead, your primary focus has got to be building regime awareness. You want to tighten your rules for weaker setups so your equity curve stops relying entirely on strong uptrends. This is going to make your overall results so much more stable, regardless of what the broader market is doing. As you implement this audit and step into your next 20 trades, I want you to keep this single, provocative question at the very front of your mind every time you sit down at the screens. Are you actually trading the market's current regime based on the data in front of you, or are you just blindly hoping for another uptrend? Answer that honestly, follow the data, and your trading will absolutely transform. Thanks for joining me on this explainer, and I'll catch you in the next one.